Good morning. So excited for another maybe boring day. It's what we were looking for yesterday. Unfortunately, it's exactly what we got. But hey, sometimes expectations are spot on and charts. Yeah, thank you, Jacob. And other days the market surprises us. Yeah, so we gotta always kind of stay on our toes and get ready. But overall, things were just whipping back and forth yesterday. Not so sure what the markets are waiting for. Um, we had news last week. There's tons of earnings that came out. They were primarily pretty great. And so what are you going to do for me today? They're talking about infrastructure, $1 trillion, which I don't see that's going to do much. Maybe Caterpillar goes up or stocks like that. The techs have made a pretty good run. The markets are still in uptrends, as mentioned. Spiders, Dow, Tech, suggest they can continue to go up. Yesterday being a type of a correction day, right there, you can see how the bar traded under the prior bar's low. Let me find my prior bar's low there, and let's clear that up. And so that's what we call a correction bar. So once we get a correction bar, we look to see, right, can it trade above that bar's high? And similar to here, this type of correction bar, they come in different shapes, but the general idea behind it is, within an uptrend, prices could be pulling back a little bit, could flat like this, but you've got, a couple of bars that have gone sideways. Sometimes it's more, but usually a couple of bars will do it. Sometimes one when things are really strong. Trades under the bars low. It's a little shakeout going, and then it takes out the high, and up it goes to the next resistance level. In this case, there's nothing up above. Could be a next whole number. That's just what we call the factory work of seeing whatever we're focused on at the moment. What's the structure of the price patterns in multiple time frames on that particular instrument? And so the weekly chart is still up, and you can see 1 week of going nowhere, 2 weeks pretty much are going nowhere, 3 weeks starting out going nowhere. And as I'm looking at this, it's certainly not nothing's out of the realm of possibilities when it comes to the markets. But just thinking out loud here, a correction bar on the weekly time frame, which we had one here, so we really shouldn't have another one. And this is a type of correction bar, whereas it was a down bar and an up bar. And when you understand candlesticks, bar by what we call bar by bar analysis, and not from the point of view of, is it a bear engulfing pattern or a shooting star or a piercing pattern or any of that, because it's all about retracements. It's not about names. It's about retracements and trends and what we call bar by bar analysis. So this is a type of correction bar that we just reversed right back up again. And when you condense information, look at different time frames, it can look different, but the idea is the same. It traded under a bar, two's low, and came back up. The trend is up, and it's supposed to go up. So that's what we got yesterday on a very minor little level of narrow range bars. Sometimes they're range expansion bars, and those are more powerful. So in like this, and so that being a powerful bar makes that a very key level of support. But it also gives me a thought of, that's a big bar. Why isn't this thing moving more than it is? And so whether it's news or options expirations or whatever it might be, that Corona, Delta, so on and so forth, whatever, right? We look at the chart because we cannot know everything that there is to possibly know, right? That's a given. Although we try like hell, especially when we start out. I know I did, And then you finally come to the conclusion that it's just not possible, but follow your method that you're using in your time frames and apply multiple time frame trends and bar by bar analysis, and you'll be fine. Right? There are times where it just says, hey, do nothing. Yesterday was one of those days. So now this correction bar within this uptrend is a good sign. Probably took out a little bit of stops, which the effect of that is to remove some overhead supply. That's the thought process behind what we do here, what we call MTS. Every bar and arrangement of bars are producing thoughts because they're telling us what others are thinking and what are their expectations. And the expectations here are for the market to continue to go up. Now, of course, others don't. They think it's overvalued. Probably it is. But until it violates the trend in some level, who cares? Right? And so whether we sit here today, again, waiting for some kind of movement is yet to be seen. So that's how we approach each day and look at what we look at each day to see, hey, is there a clue in another market that might give us insights into, hey, are things ready to go here or not? Maybe this is ready to go. Or, hey, go focus on this opportunity because where you were focusing on last week, there's nothing happening over there. So it's just something that I'm sharing with those of you that may be starting out to realize that, there's no one market that's just continually the greatest place to be all the time. It can last for a while, but sometimes you have to move from one instrument to another. All right, futures, just doing nothing. There's your little correction bar. And so far, today is an inside bar. Things are just whipping back and forth here. Proper appreciation is proper thinking. Okay. What is the link for FOMC reports again? I don't know, detective. So NASDAQ had a little bit more of a correction, as you can see, right into the noon hour. And lo and behold, if you looked to the left, there was a pivot low there and a big whole number. So all this came down in a pretty nasty way. I mean, unless you're thinking, hey, I'll average in, that's not what, we do necessarily now on a drop like this, but it would be a thought that, hey, watch this here as an intraday trader for things to begin to turn. And then we could move down to smaller time frames and see how things evolve from there. Like, so right here, you can see the, well, that's a higher low there. Let's go further back. This is the move down. So we always going to wait for some kind of retest pattern or some type of stabilization before taking an entry. We don't just bid down here at the prior low. Sometimes they just keep going down. So the proverbial falling knife. So now it's up at resistance and things are stalling up there. Normal. So now we've got a little bit of a trading range going on. And yesterday's low becomes a pretty important reference point now that it's had this dip and what should become a little bit of a shakeout. So the next part of the thought process is now that it's had the 100% or so retracement and it's at resistance, can it go sideways? Does it form price patterns like this where it attempts to go down and comes right back up again? So if it can consolidate here, that supports a bias that it can continue to go up. And so maybe this could be the update since we've had this range expansion bottoming tail bar. If it takes out these highs, of course, more buyers should come in and push it up. And so then look at what drives this, Apple, Microsoft, Google, Amazon, so on and so forth. You can put those in thumbnails and see, are they just hanging around? There's only one going up or all four, doing well. So some insights, you could just press the button on this and just see what happens. Of course, apply bar by bar. but looking at a few other pieces of information, not too much, helps increase the confidence level as to, hey, everything's firing on all four cylinders, right? There's 5 cylinders, 8 cylinders, whatever you got there. The Russell was the same, going nowhere. We spoke about yesterday the fact about financials doing better. They did okay. There's a lot of biotechs in here, and it just couldn't get going. Yeah, Ken. I mean, back in the day, when I was a car guy, if you didn't have 8 cylinders, you were nowhere, right? Now, most of these cars come in today with 4, 6 is probably a lot. But it changes, always changes. We talked about a little cell setup there. We'll see if that follows through or whether this consolidation and bullish market can push this up to the top of the range. And we're in a really kind of quiet period here over the last couple of weeks. And we're waiting for whatever event might get this market to, light a fire one way or the other. In reality, we really don't care which way it goes, but we do want it to, since the S&P and the Qs have no overhead resistance, we prefer it to go up because that's where the void is. Right now, that's not happening. The Dow didn't break the low. It was an inside day. Now this morning, broke the low, but coming right back up again. It truly is a buy the dip market, meaning the way this market trades is it trades like the way things came down yesterday. Oh my God, the world's coming to an end. And 5 minutes later, hey, we're all still breathing. None of us, right? We survived outside or inside, even with a mask on. Everything's okay. Bye, bye, bye. And up we go. And there's just a lot of indecision, as you can see, just displayed by a lot of overlapping bars, topping tail, bottoming tail. And yeah, maybe today's the day, maybe it's tomorrow. Bitcoin taking a little bit of a breather here. With some news about this infrastructure bill not being so friendly to Bitcoin. I didn't get what that was about. I'll have to take a look at that. But technically, it's just so far taking a little rest, nothing of any severe consequence. Politicians talk too much, mostly about nothing, unless it's going in their pocket. And oil. Down to support, looking to the left, it's getting a stabilization here. Just a wider whippy range developing. Gold, as we know, got killed, for a couple of days. Looking to the left, hit that support level, buyers showed up. Silver, pretty much the same story, Well, for those of you that are new, you can see the simplicity of what we say day in and day out. Look to the left, removed the diagonal lines, removed the fib lines, removed the Gann lines, the Elliott waves, and clarity comes to those willing to take the chance of simplicity. And interest rates moving up a little bit. That's a positive. That's a 30-year. It's the 10-year. And coming up to that pivot high. Actually, a little peekaboo above it. A couple of bottoming tail bars down there. And an area of support. And what are our transports doing? Kind of doing nothing. So, hey, there are times where we just sit here and wait for our opportunities or find something that might be moving. We'll see if we can do that today, or, finding some credit spreads when there's premium. The VIX is real low, so that makes it a little more difficult. But when things aren't moving, credit spreads are a good vehicle. So little quick, Dan, but all yours.
All right, good morning. Yeah, I went through a bunch of the earnings trades already. So I have a narrowed list here. All our opens are fine, with one exception. It's FSR. We shorted this, and that's 99.9% news there. So gotta go with the 30-minute high. All the others look fine. I see block. We got a put spread, ether. We're long a half lot still. Coin. We have naked puts. Yeah, so that sector is holding very well. Riot has earnings this week, but his brother Mara took off. Jacopo, Tau Climactics. Tau Jacopo, that's not how we define a climactic setup. We want fluid bars down and then accelerating lower far from the 20. This is just on a sideways coma here in a downtrend. So I don't know what to do with that. Let's look at a couple others here on my list. Carve, this was leftover from yesterday. Mirdo came in right before the market closed and gave us this. And I said, absolutely, that looks fantastic. Bullish daily, weekly. Zev, never heard of this guy, but wow, it's a big gap. Look at it. You talk about a trap. My gosh, this is engulfing a month and a half's worth of downtrend. It's gapping over the high. That's some pain to the shorts. Thomas Goldman. Yeah, we've been talking about these banks for a while. I mentioned 30-minute high on Friday was the ideal entry, and I just hate chasing things far from the 20. They need to settle down. They give me a better entry. Yep, I mean Morgan's up. It's up 4 days. I mean the 15-minute chart looks higher, so if you're trading the 15, I got no problem with it. But that's just not a pattern to get on board on the daily, because there's no you miss the breakout. There's no continuation pattern. Yeah, if you're in it, it looks fine. WFC, same as yesterday. We talked about them, but now you got a long-legged doji bar, so momentum is slowed. So nothing to do with it. CNK. Oh, the reason I'm looking at this is because AMC. AMC, there's all the talk, obviously. Meme stock had earnings. We had a beautiful put debit spread on this last week. Took our profit into the wide range bar down. Had a beautiful return on that. And let's see, now it's gapping up. So like with every gap trade, 30s market off, and it's gapping to a wall of resistance. So there's absolutely no pattern at all on the daily. But it's an ape stock. We'll keep an eye on it with earnings. But both Jim Chanos, I guess the short selling guy, he was on CNBC for a long time talking about how this thing ain't worth anywhere near its current valuations. Saying the Reddit boys don't know what they're doing. They call themselves apes, so it's not even a derogatory statement. They call themselves apes. So, and then the CEO was on saying they're going to take Bitcoin. You know, my first reaction to that is, who cares? Who cares? You put your credit card in, you pay $12, go to the movie. I mean, is it really that more exciting to put your Bitcoin iPhone app up and say, oh, look, it's taken $12 of Bitcoin out of my wallet. So that's fancy. I'm gonna go see a movie now. I just don't get it. But um, but Melissa, the announcer, was having a good couple questions there with the short seller Jim, saying, well, guess what, Jim? The market doesn't care about your valuation calculations. and that's my view too. And Greg actually said it pre-market, talking about the spiders. Greg said, you know, probably overvalued. I don't know, but who cares? It's a bullish pattern, and we're pattern traders. And I mean, I got my stripes in the late 90s. I was born trading in the internet days where valuations meant absolutely nothing. It meant nothing. In fact, I mean, this is going back in history for you all that were there trading too. You know how I'm always saying how the media just brainwashes people. They put an idea into their head and say, oh, okay, well that's the reason. And that's why it cracks me up when we've been talking about these valuations here in the market post-corona. And I'm like, look, you know, hotels and airlines are at whatever X% capacity. And now they're back to whatever all-time highs. Not jets, but you know what I'm saying. And then the media doesn't know what to say. And then it's like they sit around in a room and say, all right, what are we going to come up with? What story do y'all want to feed today? Oh, I got one. Well, what is it, Joe? I got one that we're going to grow into these valuations. Ah, perfect, Joe. Perfect. We're going to grow into the valuations. Don't worry about them today. And then, so in the 90s, the story they were telling people, you all know what a PE ratio is, right? Price to earnings. And so when you when you divide price by a negative number because you got no earnings, then guess what? You don't have a PE ratio. You have a negative PE. And the media was saying, oh, but that's a good thing. That's a good thing because if you are not making money, that means you're innovating. You're taking that money and investing it in the future. Oh, okay, that makes sense. That makes sense. And that's what they were driving. These ludicrous NASDAQ stocks that made no money and they never will to hundreds of billions of dollars. So anyway, sorry about the little sidetrack in history there, but I was thinking about it because of that conversation on AMC. But it's the same thing. Melissa was saying, who cares about values? Because, you know, AMC is going up and the apes want it to go up. And she said they control 80% of the float, I think. All right. So anyway, CNK, that Jim Chanos was saying, if you were bullish on a movie theater, he was just making the fundamental case that this competitor, CNK, is like superior value. And I take him at his word for it. But again, we're pattern traders. All right, let's continue here. AXS, that's a continuation, bottoming pattern. Yesterday was a continuation bar, trading under last Friday's bar. On the change bank, I don't know what change bank means. So here we have a bearish gap on 4, FOUR. So 30, yeah, 30-minute low. I like this. Oh, these two I posted already. Apps. And next Wednesday, a week from tomorrow, we're going to be doing MT Live on AO. Yeah, I remember AOL, of course. Oh, Disc in the Mail. Yeah, I remember all that. Absolutely. And do you remember the movie with Tom Hanks? You Got Mail. That's what made that famous. And that little recording that would always come up during the day. You got mail. All right, so I had bottoming pattern here at the 200. I like the gap over the red bar. So 30-minute high. This is a put spread. Triple D. Remember we traded this one right here, the new low plus. We had a nice little swing trade there. Now it's gapping up on earnings. So it's a long watch plus put spread watch. FLGT, 96 bucks. I don't know what to do with that. We'll come back. Plug, 29.60, 30-minute high. Another idea. Sale. Oh, look at PPS collapsing right now, but no worries. We said 30-minute high. Yeah, I remember Roadrunner. I had an email with them. I was in California, McGraw, living Southern California, and I had, or maybe it was Carolina. Whatever it was blah blah Comcast.rr.com. Yeah, it had the .rr in there. This sale, 47 bucks. Bearish gap. Wow, we're got to do a lot of history here today. So we got a bearish gap here. A carve, Greg mentioned yesterday, bottoming pattern. Let's see if it can hold here. We don't want it to retrace more than 50%. Qless, I don't, I need more volume. I'll come back to you. 150, that's a beautiful breakout. Beautiful breakout. Let's just see what it does in the first 30 minutes. Target 160, so it has room. Look at that. One print and it's back down. Yeah, net, I saw. Net looks good. We found that one yesterday scanning. NTR, could be a put spread. Look at this poor Smile Direct. Remember this was an IPO, back here, less than a year IPO. And now that looks like it's in a death trend. That looks horrible. If Debbie were here, she would tell us this is a descending triangle. That's a nasty gap. ARQ alarm. Oh, ARQ looks great. ARQ. We gave this to our ETF traders, but you all could buy a 5-minute high. It looks fantastic. That's what we call a bear sandwich. Nice bear meat in between two big bull pieces of bread. All right, we've been in this Verizon for a while. Let's go ahead and move stop break even. My